BlackRock's becoming the new pioneer in cryptocurrency. We've seen their Bitcoin ETF. Now we actually see their institutional digital liquidity fund.
This now, and we believe it's so important to be anticipating the next move. I would also say on the beginnings of a ETF Bitcoin, we believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most important is if it's every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe...
Incredible stuff on the Ethereum blockchain. It's the first tokenized fund launched by this financial giant, and it operates on the Ethereum network. Here's kind of a breakdown of what it is. It's tokenization. So BITL represents a novel application of blockchain technology in traditional finance. It takes real-world assets such as cash, U.S. Treasury bills, and repurchase agreements and creates digital tokens on a blockchain to represent ownership of the assets. Underlying assets solely in high liquidity and relatively stable assets, making it a lower risk investment compared to some cryptocurrencies. You're also going to get a yield. So it's designed to generate regular yields for investors. These yields are paid out via the blockchain every day. Incredible stuff, leveraging the efficiency of the Ethereum network. So they're requiring a minimum investment right now of $5 million. So it's not for everybody right now. It's for people that kind of have that forward-thinking vision with their investments and, with their risk management.
So let's just start with Ethereum, though. Why, what is it? What is different between that and then Bitcoin? So with Ethereum, if you go to their website, I'm going to read to you what they put at the top. There's two sections where they say, hey, this is what Ethereum is. And I think it's probably the best way to describe it. Before I do that, just know there's no simple way to explain it. And I'm going to keep it as streamlined and like a video for the layman, because that is always going to be the way I want to bring things, to light and to give you an aspect to view it through that layman's terms. Because that's the way we need to. We don't want to be getting overcomplicated with everything. But this is complicated from the word go. So it'll take a little while to expand on it. Stick with me because it is so important. I can't even tell you how important this is going to be if it grabs your interest for you. So anyway, it says, welcome to Ethereum. Ethereum is the community-run, technology-powering the cryptocurrency Ether or ETH, and thousands of decentralized applications. I'd highly recommend you go to their website, which is ethereum.org. One more time, their second description. Ethereum is a technology that's home to digital money, global payments, and applications. The community has built a booming digital economy, bold new ways for creators to earn online, and so much more. It's open to everyone, wherever you are in the world. All you need is the internet. So, just as a whole, what Ethereum is, obviously it's a cryptocurrency, but it's a little bit more malleable. It's a little bit more pliable. It's a little bit more, I'll use the word, centralized. It is a decentralized software protocol, and the ETH, the native token, what people use to trade, it's the same type of cryptocurrency that you would find with through blockchain technology and that decentralized ledger that you would find on Bitcoin, right? But the difference is this one is actually made to grow with just the human race, essentially, with technology, with what we need, with what we're doing. So it's more built to be like the internet of payments, like what you saw here, or the internet of monetary goods, or the internet of commerce, as far as trade and commerce. Versus if you were looking at Bitcoin, and I'm going to have to start comparing the two just to kind of outline the differences. Bitcoin's more like we said, a digital commodity energy. So if you wanted to have property or land in a digital space, you kind of need Bitcoin to be like the earth, like it's the core understanding of what gives you anything stable in the digital space. So if you have Bitcoin as a digital earth, gives you like a stable foundation. The next layer on top of that, in order to build things on it so that we could actually use it, is going to be like Ethereum. So when you're thinking of Ethereum, now you can kind of put an idea to it. Like, okay, you have Bitcoin is the base layer, right? In the cryptocurrency economy and sphere. It had to be there. You had to have Bitcoin in order to have Ethereum. So I'm not someone who would say that you need to be pro Bitcoin or pro Ethereum. I'm pro both of them. I mine Bitcoin, yet all my investments are in Ethereum. But the reason being is that I can see the use cases for both. One couldn't work without the other one, to be honest with you. And here's some quick outlines on that. Is with Bitcoin, you want it to be something like a digital gold. You want it to be like digital energy. You need that because that's really what's going to keep checks and balances on anybody trying to come in and create their own software protocol, their own digital dollar, and come in and start doing exactly what we have here in our analog space online. And that's going to happen anyways, in my opinion. The point is what Bitcoin offers and its purpose is you can't do that with Bitcoin. You can't change the protocol easily. Probably not ever again, the base layer protocol. But with Ethereum, it changes all the time. And it is decentralized. So it's not one person that can come in and make the change. It has to be the whole organization that votes and agrees. So it's a true democracy, you could say, where people have to vote and say, yes, we like that protocol. We like the new protocol of Ethereum. We want to change the way it works so it can serve us better. They vote on it and then it goes into place. Versus on Bitcoin, you have hundreds of thousands of people that could do the same thing and vote, but there's absolutely no centralization. I mean, Bitcoin is completely decentralized. Like I have 7 nodes, and then you have all these other, millions of people that have their nodes. How could you get us all together to vote on something? You can't, which is why it's so decentralized. Versus on Ethereum, if you wanted to make a change to it, to the code and to the software system, how it works, so that you could, again, use it for something that you need in a digital space. It's the same voting system, but it's a lot more centralized because there is a founder. There's 2 of them, Vitalik and one other guy who I'll put his name up here. But Vitalik Buterin is the main guy that you're going to hear about. And they have a face and essentially the Ethereum organization that is kind of, the leadership, so to speak. So with those guys, they propose things and people trust them and say, hey, yes, I like what they came up with. I like what they're doing. And I'm going to vote yes on that. Right? So it's somewhat centralized because on Bitcoin, Satoshi went anonymous. He put the code out, got it running, and he went away. You can't call him and say, hey, can we change this? Can we make the block size smaller or bigger? Can we, do it to where there's more than 21 million Bitcoin? Can we do this? Can we do that? No, you cannot because he's gone. There's no centralized anything, and there's not even an organization that runs it. Versus literally every other cryptocurrency has some founder, organization, or something that kind of runs the organization, even though it's decentralized. So big differences on the 2. Now, I'll sum this up because I want to get to our next chapter. That's just an overarching thing. Bitcoin, stable digital commodity. Then you have Ethereum, digital internet, digital internet of currency, right? It's like malleable. You can create things. We touched on it briefly, but smart contracts could be like me paying my car note or my mortgage through a smart contract, right? Instead of having a mortgage provider or a finance or a loan provider for a car, you could just set it up on a smart contract and execute it, and it executes over that, 5 years or whatever it is. Now, I realize that doesn't give you the opportunity to have credit, right? So it's a whole different argument, but the applications are there. You can't do anything like that with Bitcoin. With Bitcoin, you have your miners out there, they're mining, it's going to hit 21 million, and that's it. Nothing changes, the value just goes up.